So joining me on the call today, I've got David Strybosch, a really exciting story, but the topic for today is money for Jam. And it's literally a unique way to fund your business growth while actively supporting a charity. So David, welcome to the call.
Thanks, David. Thanks for inviting me on here to talk about something that I'm really excited and passionate about.
Yeah, maybe start with a bit of your background and what sort of brought you to this position.
Okay, really quickly, because I could talk for a very long time, but basically the journey I went on was when I grew up to even go to school here in Victoria. We moved many times. We were so poor, we had to even get school shoes from the school chaplain. I'd constantly see my mum just having to return groceries just to afford what she could. And so that really, as I grew up, put a real fire in me to help small businesses and families just to set them free from, savings, get rid of debt, help them with wealth creation. But it also set me on a journey where I went into financial services. I became one of the largest margin lending writers in Victoria through a product through CommSec. Never had a margin call in the history of our firm, and we did some really amazing work to showing families how to pay off their debts in half the time while investing. I left that industry and started working on a number of different projects, and started then putting together all of my learnings over these last few years, and then was just in the process of, and then came across what I'm calling Give and Receive, which is a program that's designed to help charities, not profits, and bring sustainability to that market. It's the first of its kind social governance platform where businesses can give to nominate any and support any not-for-profit or charity anywhere in the world and still claim a tax deduction. And as an individual, you're able to use the platform and at any time take your money out whenever you like. But whilst the money's in there, it's actually supporting charities as well. But I then went on a journey of going, well, how can I find ways to partner with people where they could help support me to bring this project to market? And then I came across what was called the ESIC program, and It just blew me away.
Now, this is the unique twist of all this is you start off with this sort of yearn to help people.
Yep.
And you've launched this charity, Give and Receive, and it sounds to me like you were really looking for ways to get sponsors for this charity.
Yeah, well, let me just so the Give and Receive is a for-profit platform. We do have a default charity called Handshake Aid, so it's a so just wanted to be clear there that Give and Receive is a facilitator to help charities and not-for-profits both locally and around the world.
Right. So it's just really a way of facilitating other charities.
Yep. But I was looking for a way to, how could I partner with people, but do it in a way that was without, managing the risk, because I don't like people to work with me unless they themselves are, doing it from a position of strength and they themselves are winning. So I then came across the ESIC program. I've been working with it now and partnered with a couple of gentlemen who've been doing this for 4 or 5 years. And it's absolutely amazing. But what's surprising me is just how many people aren't aware of, firstly, the program itself, but secondly, how it can be used in such a way to make it a true win-win for everybody involved.
So let's go back a step. ESIC stands for?
So ESIC stands for the Early Stage Innovation Company.
Yep.
And so it's a program that the ATO, Australian Tax Office, basically introduced in 2016 in order to help startups get to market, and in doing so, give it back to investors a 20% tax offset and the ability to pay no capital gains for the first 10 years should you sell your shares.
So really the whole idea of the ESIC program is to help people who have got a startup idea get off the ground by giving them a tax sort of advantage.
Yeah, that's keeping it really simple, and there's a lot of information available on the ATO site that explains it all and what you need to do to qualify to be a ESIC company, but also what you need to do to qualify to actually participate in this program as well.
Great. So let's do a deep dive. So obviously ESIC is a part of this formula or this idea, right, of money for Jam. But what are the things that you uncovered as you went through this application for ESIC?
Well, firstly, I was amazed that, you often hear that Australia is not very supportive of helping startups come to market. And I heard stories that it's very difficult to raise funds in this current environment. But then I came across this program, which really just showed that that wasn't the case at all, that you not only, you've got the government supporting and trying to assist startups through this program,
Yeah.
but it also gave back to investors. But then the thing was, though, it talked about that the maximum that most people would potentially invest is up to $1 million, because they give you a tax offset of 20% of whatever you invest, and that's to a maximum of $200,000. So that's even though you can invest more, you're only going to get that offset up to 200. So that sort of sets the cap of what you can do.
Yeah.
You could also only have a maximum of 50 people in your company.
Yeah.
Unless they're what they call retail investors, and then you can only have a maximum of 20. And so for me, it was, well, I wanted to find a way where I could utilize this program, but also how could I do it in a way that meant that you were not putting yourself at too much risk? And then I actually worked it out, and I had come across a couple of gentlemen that I've now partnered with who've been doing this for over 4 or 5 years. They were running the program, and then we just made a couple of changes to that program, and it's just mind blowing now. It just makes it's phenomenal.
So let's go back to the sort of application. So it sounds like E6 only for a unique situation where someone is a startup or an innovating company or has some new idea.
Yeah, so there are the company that needs to qualify. There are a number of different ways that you can qualify to be an ESIC company, but and again, you can go to the ATO site, and it will actually spell out to you what those different ways are that you can qualify. And so one of my companies does qualify as an ESIC company, but then what I was concerned about was, I was going, okay, well, I want to get 50 investors on board. Ideally, you want to do up to a maximum $1 million. But then I was thinking, well, who's going to put $1 million into a startup and take that sort of risk?
Yeah.
What we then found was a way that enabled you to do that, still benefit from the tax offset, but manage the risk. And this is where it's just in itself unique as well. And so the way that it works is you as the investor, you pay a 1% deposit. My partners who will basically lend you the money through their licensed entity, those funds will then go into that startup. It will sit in a custodial, effectively like an escrow account.
Yeah.
The startup cannot touch those funds. What's happening is they've made an arrangement, an agreement to run this program, that those funds will be put on deposit and they'll generate returns from those funds.
Gotcha.
And that's how the startup generates funds for itself.
Okay.
But
so
then
this formula sounds unique, because now what that means is that I can be a business owner that doesn't have an innovation in my own business, but I can still go and get access to this funding.
Exactly. So the great thing is that we're able to partner with a lot of both individuals, business owners, and what's great about it is that you're able to use this program in your company or as an individual, and you can do it not just once for that year. You can do it multiple times if you qualify as to what they call a sophisticated investor. And this is the really important thing to note, is that a lot of people, when they hear about the term sophisticated investor, straight away go to an accountant certificate, not realizing that is only one of 4 ways that you can qualify as a sophisticated investor.
Okay. So what it sounds like is you've worked out that there's 3 other ways that people can qualify. So really, it sounds like you've looked at this ESIC program and you've said there's multiple ways in. There's multiple things that you don't need, but you can access. So having an idea or a startup that you want to invest in, and the money comes out of the tax benefit anyway, so it's not coming out of your own pocket.
Yeah, and this is what's great, is the ATO are very open about saying we want to help startups, and we're going to give you this really good tax benefit in doing so. And so what we want to do is we want to give the investors who partner with us the confidence to know that not only do you get an opportunity to assess the startup for a period of time, but you can also manage the risk in the journey that you take with us. And so we had a situation recently with a gentleman that was had sold an investment property, had a fairly significant capital gains. His earnings were around the $120,000 mark. So he wasn't earning a great deal of income.
Yeah.
He would not be under the, he wouldn't be able to obtain the accountant certificate where at the moment you need to be earning $250,000 per annum and will have $2.5 million in net assets. But we were able to show him how he could partner with us, but also benefit from the ESIC program. And it was, for him, it was so exciting because not only was he able to help us as we take the journey of bringing to market a very exciting project, but he was also able to then benefit from what he really needed this year as well, was an offset to then minimize the capital gains tax he was going to pay. But also, we've also shown that and because the way the offset work, it's not a tax deduction, it's a true dollar for dollar benefit. So a tax deduction will reduce your taxable income, and you just pay then the tax that's remaining on your taxable income.
Yeah.
And so you get that deduction may be worth zero up to the highest marginal rate of 47 cents on the dollar. Whereas an offset is
tax you're paying, right?
Yeah. Well, an offset is a true dollar for dollar in that when you have to pay tax, it removes that tax payable. And it's like a carried forward loss, if you're familiar with that, where the offset will carry forward indefinitely until you use it up.
Okay. So all you're saying is rather than getting a tax minimization, you're getting a tax offset, which then you can carry forward, which means like if you owe the ATO $1 and you've got a tax offset of $1, you just don't pay the dollar.
Right? Yeah, I just want to be careful about the wording on that. So owing the ATO. So one of the things that you have to be very careful about is that if you owe the ATO money now, the offset won't remove that. It basically just wipes out any tax that's due and payable, not what was previously owed. So you would need to remove what was owed, but then you can utilize that offset going forward in a number of different ways. If you know you've got that offset, what's really great about it is both you as an individual or your business can actually write to the ATO. Your accountant can write and apply for a variation, and therefore you can not pay tax for some time until you use that offset up. So that's amazing because that means the cash flow comes to you as a business owner and or as an individual to help you where you need it most, which is either supporting services like your own, helping pay off your mortgage, using it to help your family.
Yeah, this is amazing. So look, obviously this is a rabbit hole, right? We can go deep down into this, we're going to run out of time today. I suppose the purpose of today was to really identify that you know this approach, right? You've been doing this for a while. You've got the detail, you've got the understanding of how to.
My partners and I have been doing this for 5 years.
Yeah.
And we've got case studies to prove that it works. And that's what's great about it. So, and we've got all the evidence. I can refer people to information that will give them what they need to be able to satisfy that it does work.
Even more exciting than that, David, we're going to be talking about this in a deep dive. So this is an intro just to get people to understand that there's this access to funds. We're going to do a deep dive in a few weeks' time where we're actually going to go through the process of how do people know whether they qualify, number one. What's the upside of all of this, number two? So the net result for them, but also the net result for their ability to contribute to supporting a charity. And really just uncovering the availability, because for most people, ESIC sounds a bit hard to get to. But what you've just described is it's actually a lot easier as long as you understand how to put your application in and what the net result will be. So I'm very mindful of time. I know I just wanted you to give me an intro.
Yeah, sorry, I could just talk about this all day long. It's so exciting. I mean, I'm so, like, for me, it was amazing to come across something that is really a true win-win-win.
Yeah.
Where everybody is going to benefit, the startup benefits, the investor or the business owner, family, individual benefits.
Yeah.
But especially knowing that you're also going to be helping bring to market a really exciting project that is going to be a game changer.
Yeah, brilliant. David, look, thanks so much for your time. I am looking forward to the deep dive. And for anyone who's interested in coming to that, the Money for Jam session is going to show people how they can tap into ESIC to really boost their business this year. So thanks again.
You're welcome. Thanks, David. Really appreciate your time.